everyone and welcome to a new ATFX video. My name is Gonzalo Canete, and if you are interested in gold market, in Eurodollar or in cable, this is your video because we are going to analyze one of the most important macroeconomic data around the corner in US economy that will definitely cause an impact on these three markets. So during this video, we're going to explain what is the situation with this macroeconomic data, which is the US inflation in the United States, the evolution of the inflation in the United States, and the potential effect on gold, on Eurodollar, and on cable. But before we start, please, if you are not subscribed to this channel, click on the subscription button, click also on the bell to receive notifications, and if you like this content by the end of the video, give me your thumb up and leave your comment on the bottom of the video. Let's go to the presentation. As always, I made the presentation to follow more or less the first point, the most important notes I want to share with the audience in regard of the future of the dollar and the influence on these three assets. Is US economy at the dead end? Three different points I want to highlight here. First of all, the tariffs. The tariffs can cause inflation by definition because it's increasing the price of the final good, the final item you can find in the store. Could rise by 3%, 40%, 50%, depending on the country it's coming from, and therefore obviously is causing an inflation effect on the products and on the services. Federal Reserve knows this, and that's why Federal Reserve has been mentioned. The main concerns they got about cut the interest rates is the trade war done by Donald Trump. The Fed will not be able to lower the rates. If inflation is coming caused by the tariffs now in the coming months, so far we have seen GDP contraction, we have seen also labor market little bit getting colder and slower. So it's expecting also to see after these 90 days ceasefire on trade war, is expecting to see a new increase on the prices, a new inflation caused by the tariffs. If that's the scenario, Federal Reserve cannot cut the interest rates. Just when the US economy is starting to show weakening economic data. If you analyze, I give you more precise data in relation with this. The falling USD GDP by Q1 on 2025, it was dropping 1.5% in negative, the GDP of the United States for the first period of Q1 2025. Cooling of labor market, national and global recession risk to the trade war, obviously, because either if they accept the Donald Trump conditions or they reject it, for sure, we're going to see that the global economies are going to slow down because they need to accept new conditions or produce in the United States at higher cost, or if they don't accept these conditions, they do not produce in the United States at higher cost, they're going to keep doing the business in the way they're doing, they need to face higher tariffs, and therefore it's affecting the levels of sales. These industries, especially China industry, are producing. The production going to drop, obviously, because they cannot sell, or the sales going to drop because of the tariffs effect on the final price of the product. And in any case, either A or either B, a recession or a slowdown in the global economy is almost guaranteed. That's why I believe this is going to affect the global terms. Now, going to the main point, that was I want to mention. In this scenario, interest rates cut is necessary for keep the economy rolling. But if inflation is coming, they cannot cut the interest rates if they follow the economy manuals. Now, what is going on with inflation? Let's keep an eye on that then. Inflation seems to be getting under control so far in the last 2-3 periods. Even when during the summer 2024, it was rising from June or August, it was rising back again to certain levels, as you can see here. But since then has been dropping back again. Even the last period, if I'm not wrong, the last period of inflation, the last month, it was below the expectations, and therefore is good. Core inflation is around 3%. Standard inflation is around 2%, still over 2%, but very close to the target of 2%. If we'll be dropping below the 2%, Fed could finally cut the interest rates. But this is the point. If after 90 days of ceasefire on the trade war, tariffs are coming back, in that case, probably we will see inflation coming in the next 2 or 3 months. which is not good because it's going to force the Federal Reserve to hold the interest rates when the US economy need the interest rates. End of the story. Now, another asset you could follow is the Baltic Dry, the index which measuring the cost of maritime traffic, all the boats, all the mercancy transport over the seas. You can see the evolution of the cost of this. And therefore you can see also the expectation on future inflation. This index was reflecting really well by the end of 2021, the inflation suffering the coming 2-3 months after in 2022, and therefore that's why I'm keeping an eye on this index when we talk about inflation. However, still, if you see in long term, you will see the index, even when it's in a bullish trend, is still so far from the levels reached on 2021, and therefore there doesn't seem to be imminent massive risk inflation based on this. We also mentioned already the main problem, which is the future of the dollar, because in this point we can see certain indicators showing us the dollar is getting weaker and weaker regardless the monetary policies of the Federal Reserve. If you pay attention to the fact that Federal Reserve since December 2024, they didn't cut the interest rates, and it doesn't matter because the dollar has been dropping and dropping and dropping since then. So imagine, without even not cutting the interest rate, the value of the dollar has been decreasing since then, and therefore I believe we are facing a kind of a systemic risk or systemic change in the evolution of the dollar. Going to the charts, the most important point, you can see the evolution of the dollar has been dropping, as we mentioned, and now making base in around 96 points on dollar index future and coming up to 100 points. But still, I believe those 100 points, even if the dollar in the coming days is getting stronger, 100 points in dollar index gonna work as a kind of resistance, and therefore we are under the risk to see new drops in dollar value. Affecting how? Affecting the euro dollar in the main sense. If it's moving back to 100 points, probably going to push back the euro dollar to the level of 116, 115.50, which is these targets we got here. That's the case in the case of euro dollar. In the case of cable, we can expect similar scenario, which is dropping to 134. But still dropping, if the dollar is coming back to 100 points, will be dropping to 134. But still, on that levels, we could expect that the pound will take some territory to the dollar and moving back up to 135, 136. Which is amazing the way we have been doing this. And it's another economy has been resisting really well without cutting the interest rate. 4.25% is the interest rate as a reference in United Kingdom, very far from European Union, which is 12.2, and therefore that's why I believe we can face a different scenario there, and the pound can get stronger than the euro. Now, this is gold. Finally, you can see the gold is making a bullish pattern as far as the dollar index is falling. You got dollar index here falling, you got gold rising, and clearly showing us that if at some point the futures on gold break the $3,450 per ounce, therefore we will see a bullish market on gold. More clearly, you can see the chart here, and you will see that these levels of $3,450 are the main resistance that if it's breaking up, it could cause a new bullish trend on gold to a new high record. Well, that's all. I have been going fast, I believe, but I didn't miss anything. Point by point. If you like it, please thumb up, comment on the bottom of the video, and I see you in the next reports. Bye bye.